Hey guys, Bill here, and in this video I'm going to talk about using Traditics market net flow to trade SPY intraday. Okay, there's lots of videos that Traditics makes where they kind of go through all of the basics of this platform and explain everything in the different options and different settings and how to use it and all this stuff with a lot more info than I'm going to put in here today. I'm going to be focusing on how I use it, what my preferences are. I urge all of you to watch their guides and their videos on YouTube to better fully understand how this works. I think that'll help you a lot, but this is more how I use it to trade SPY intraday. And what I like to do is I am looking for three major things to give me high conviction in a trade. That means I'm entering with full size, I'm looking for bigger moves, things like this, okay? So first, I'm looking for divergence, which means the separation in the puts and calls. So whether it's bullish or bearish, what we want to see is the price start to separate. This is from Friday. And as we know, it was a very bearish day, pretty much the entire day till that last rally at the end of the day. So obviously, look, from the beginning of the day, we're getting SPY's price is the white line. Red line is puts, green line is calls. We're getting a dump here in price. And right away, we're starting to get some spread on the separation of calls and puts. Now, is separation alone a reason to get in a trade? Not really. But what we are looking for is separation, and ideally with puts being fairly positive, like at least over 10 million, and calls negative. Now, Friday, the interesting thing about it was calls kind of floated around zero pretty much all day. So it could have been more bearish if we got these, if this green line was down here more like -10, -15, then you have really big divergence. And it's days when you see that, you're going to want to feel confident about sizing up, staying in trades longer, and all this. Now, there's a couple other things. When you open this website, it's going to default to this bottom section being momentum. All right? And basically that means when it's red, you'll want to be playing puts. When it's green, you'll want to be playing calls. However, I find that this feature is not as effective as convergence, and how you access that is up here where these two symbols, one looks like a stock movement and one's a little like theta sign, and you're going to want to click that, and it's going to make convergence your bottom. Now, why do I use convergence instead of momentum? Here's why. Let's look at momentum during this huge rally at the end of the day. So SPY's pretty much tanking. It finds a bottom here, momentum as high as it's been all day, and then SPY starts to just rip. And momentum does not flip green in any convincing way almost to the very end of the day. And at that point, SPY's made like almost a $5 move. So if you were strictly watching this momentum and saying, well, it's still red, I'm going to keep holding, you would have took a pretty bad beating from down here. But if you flip to convergence, which is basically telling you that SPY is acting in a logical way with the flow, so on a very bearish day, the price should be going down. On a very bullish day, the price should be going up. Look where this turns gray. Gray means that there's no longer convergence. We're still bearish on the flow, but the price is not respecting that. It's not following that. If you get into trades when you see the convergence match the flow, which is where the red would be because we're bullish or bearish. If it was bullish, this would light up green. If you're getting in trades during these periods and out when there's gray, that's way more effective in trying to decide when you're closing your positions. So look here. Price comes down, it hits a bottom, we turn gray. Almost immediately once this starts coming up, convergence is saying, nah, this is not working anymore. Get out of your puts, all right? Compare that again to momentum. Momentum's super red all the way up to here. So that's why I use convergence. So once I start seeing divergence in the flow, I'm looking to get in a position, and it's important to use your charts Maybe you're looking for a little pullback to a key level, or it's about to confirm as a breakout over a key level. Whatever it is, don't just slap puts just because you see some divergence and there's, the convergence is red. This is a low red, like notice that it's kind of choppy here. We get the dump and it's a little bit choppy and the convergence is kind of low. It's red and it keeps going gray. And then it starts to really fill in and grow. And now look at SPY. Nice move down. Bounces, convergence back to gray. So that's why I use convergence. But you're also going to want to be looking at your charts and not just slapping puts because this turns red, right? You want to still try to get good entries. You just want to use this as extra conviction and really getting a good feel for what's going on with the flow. When you're not worrying about hedges on SPY and the indexes, because that's all filtered out in this data, and just gives you that conviction to size in, stay in longer, and things like that. All right. Now, that is really the three main things. You want divergence. Obviously, ideally you want higher, number of puts here on this bearish day, and you'd like to see the calls get negative. That'd be perfection. But you can see how much of a down move we got even with the calls sitting around zero. And you want that convergence to line up for you. And then finally, the last icing on the cake is this little notification up here, which is called time frame continuity. And what that means, when it's lit up red, obviously it's a bearish day, it means all these expirations, 7-day contracts, 15, 30 days, and no limit to the expiration, are all bearish, okay? That's not going to always be like that. Sometimes on the no filter, which is the normal setting, you're going to have heavy bearish flow, but maybe on the 7-day expirations, it might actually be bullish, even if it's choppy. So what does the chop look like? Let's go to Wednesday. This is the type of day, for the majority of the day, you either don't want to be trading SPY or you want to go in with super light size and look for scalp opportunities, all right? See how there's not much separation. Both of these, like puts are up 2 million, calls are down 2 to 4 million, but there's not a ton of separation. Here come the puts come crashing down and then they're just, bumping into each other. SPY's price is flat, it's choppy. When you get separation, they're both negative. That's not good. The convergence is basically non-existent, not big. And it's like that all day, all right, pretty much, until what happens at the end of the day. This is another big thing to look at on market not flow, is any type of cross, a major cross, where something that was lower starts to separate and take off. So this would be a bearish cross here. We were starting to get a little bit of green momentum towards the end of the day, and calls were up, and then we had puts just start taking off. And now here's your divergence, and the convergence flips red and starts to grow. Right around here is a pretty safe place to start thinking, all right, I'm going to slap puts with some size and some conviction that we're going to get a big move. Use your chart again, look for places to enter. Maybe you're coming up to some, or just crossed a key level and you're looking for a retest of it, and then you enter to springboard off that. But as soon as we get this cross and that divergence and the convergence down here, look at SPY, it just dies, all right? And that's, that can happen, bullish or bearish, either way. But when you see those crosses, it's usually a good indicator that there's a big move coming. So that's what I love about this, is it really helps just kind of peel back some of the uncertainty that you might face daily when you're just playing the charts and you don't really know how the flow looks, what's going on behind the scenes. You're not really you don't have conviction about a move that's happening, and using this tool can really give you that kind of comfort and idea of, hey, should I be sized in today? Should I be looking to take profits quick? Or do I have some confidence that we can really see, $2, $3, $4 moves here in my position and kind of ride that for bigger gains? So this is a great way to, you know, just add that extra conviction and all those things. But that's really it as far as how I use market net flow. You can use it to trade any stock, but the reason it correlates so well with SPY is that this data about the puts and calls is for like every stock, right? So no ETFs, but all the individually traded stocks. And you know, because SPY has 500 stocks in it from all different sectors, it really respects this information well and reacts to it well most of the time. So that's why I love it for SPY specifically. But that's really it, guys. If there's, you know, it's a pretty deep platform and tool. There's a lot to learn about it. I really suggest, like I said earlier, going on Tradietics websites or YouTube and looking at their different tutorials to kind of understand it as much as you can. And then a few days this week, just have it pulled up and start to watch it during live hours and see how SPY reacts and kind of get familiar with it and how it responds and how it moves and correlates. And then you can start taking trades with it with some conviction. But that's really it. If you have any questions about it, let me know. If there's any other things that you'd like to know about it or any other of the tools of Tradietics, I use a lot of their stuff. I know, you know, I talk about it a lot in Discord and things like that. Just let me know. I'll do some extra videos, but hopefully that makes sense for you guys. It is a little bit of a deep subject. Let me know if you have any questions. Thanks.